Welcome to Pinvest TV, India's first real estate channel. Property price rise expectations dip. 63% of Q2 respondents forecast higher residential prices, down from 82% in Q1. The outlook for the residential real estate market remains broadly optimistic, despite a cautious stance adopted by stakeholders for the next 6 months, according to the Knight Frank NADCO Real Estate Sentiment Index Q2 2024, April to June 2024, report. According to the latest report, 63% of respondents in Q2 2024 predict an increase in residential property prices in the next 6 months. This is a notable decrease from the 82% who held a similar view in Q1 2024. The decline in expectations about price rises may reflect growing caution among investors and buyers, potentially influenced by anticipated changes in the budget and broader economic conditions. Regarding residential sales, around 51% of respondents anticipate an increase over the next 6 months. Regarding residential sales, around 51% of respondents anticipate an increase over the next 6 months. This marks a decline from 73% in the previous quarter, indicating a more cautious expectation among market participants. The dip in confidence highlights a shift in sentiment, influenced by broader economic and political uncertainties. In contrast, the sentiment regarding residential launches has shown a more positive trend. In the second quarter of 2024, 61% of survey respondents expect an improvement in residential launches over the coming months. This figure represents a slight increase from the previous quarter, suggesting a gradual recovery in new project initiations. Overall, while the residential market continues to show positive long-term prospects, the current cautious outlook underscores a period of watchfulness and strategic planning among stakeholders. The evolving economic landscape and upcoming budget announcements are expected to play a significant role in shaping market dynamics in the near future. The Knight Frank NADCO Real Estate Sentiment Index for Q2 2024 reveals a tempered outlook in the realty sector, with the current sentiment index score decreasing to 65 from 72 in the previous quarter. This decline suggests a shift toward a more cautious approach among stakeholders, despite the sector's resilience and strong long-term prospects. Similarly, the future sentiment index has also softened, dropping from 73 in Q1 2024 to 65 in Q2 2024. This adjustment reflects growing concerns among stakeholders about macroeconomic uncertainties, fiscal policies, and geopolitical tensions. However, the index remains in positive territory, indicating ongoing confidence in the sector's overall strength. Hari Babu, president of NADCO, commented on the findings, noting that while there has been a slight decline in sentiment, the Indian real estate sector remains resilient and optimistic. He emphasized that the shift in sentiment is largely due to recent political and budget-related uncertainties. Despite these challenges, confidence in the sector's future remains robust, with continued activity in both residential and office markets. Developers, along with banks and financial institutions, are maintaining a positive outlook, suggesting that the sector is well equipped to navigate short-term challenges and continue its growth trajectory. We value your input. Your feedback shapes our content. Thanks for watching Pinvest TV.